Hello and welcome to the Morningstar series, Ask the Expert. I'm Emma Wall and I'm joined today by Simon Molica from Morningstar Investment Management. Hi Simon.
Hi Emma.
So we're here today to give a commercial property fund update. I thought we'd start by looking back on everything that's happened for that sector over the last 6 months. Since the Brexit vote on June the 24th this year, what happened?
Yeah, so there's been a lot of developments in the sector. And recent developments were their intention to open. But like you say, let's take a step back from that and let's think about what happened. So even before the Brexit result, what we were noticing about the industry is the return profile was probably going to be less going forward, and we're expecting more of an income profile from the return as opposed to a large total return, which is what we'd seen over the previous years, especially after the recovery of the global financial crisis. From that, we also saw redemptions slowing as well. So flows into these funds were certainly slowing and started to go negative. So they had already been dropping off before the vote. Now the vote really acted as a catalyst. I think it caught a lot of people by surprise. And then really what happened was redemptions suddenly sped up. It was a knee-jerk reaction to the result. It caught the industry by surprise. It caught the funds by surprise. In some ways, I think the funds were de-risking slightly in anticipation for my points earlier about the redemptions that were happening and potentially the return profile of maybe asset allocators starting to step away, but they weren't expecting what was about to happen after the Brexit vote.
And about half a dozen funds, retail funds, closed to trading just because they couldn't service the volume of redemptions, requests which were coming through, among them Threadneedle, Standard Life. However, things have moved on slightly since then, haven't they? And this week and last week, we've started to hear about that closed to trading status being alleviated.
Yeah, I mean, there's certainly been challenges in the sector. The positives are that things seem to be coming back to normal. Obviously, what we would like to see, and the asset managers themselves, is for these funds to be able to open as soon as possible and to be able to be tradable again. They are meant to be daily liquid. Obviously, the issues are if redemptions and the amount they model going forward are too much and they don't have enough cash, then they simply have to suspend. They have no option. And I guess the wider issue with that is if one big fund suspends and then a few more, it kind of funnels the flows to the last remaining, which is why you saw this gradual sheer volume of funds that suspended from trading. But yes, they've announced the intention to reopen. That's positive. We started to see a few positive signs, and one I really would like to talk about is the market itself, the transactional market. So we've heard from property managers that they've been able to do a structured, a controlled disposal program, which is what the intention was, so that they can treat clients fairly, not have to kind of fire sell their properties in a matter of days. But actually, they've done that over months. But the key is that market seems to be transacting now. It was pretty much closed for 2 weeks after Brexit, but it started to pick up. And because of that, it means they're now getting the confidence to announce that they're either reopening like Threadneedle did on Monday, and it gave 2 weeks notice, or like the others that are setting some date in potentially October. So there are positives. The one, I guess, cloud that's sitting above us all is, as much as the asset managers can try to assess what kind of redemptions may come, clearly they don't know, they can't put their hand on their heart and actually prepare for the worst as such, but they need to, reopen again, which is what they're trying to do. But we'll have to wait and see what kind of redemptions come through, and, potentially they get forced to suspend again. I hope that's not the case. They don't think it's the case. Clearly they've planned to reopen when they hoped there would be a bit more stability, but it's something we're not going to be able to get away with for the moment. And I guess the second point is, Brexit happened, but actually Article 50 hasn't been triggered. There hasn't been much clarity, and potentially, that could be another catalyst that if Article 50 was to trigger, that, money comes out of the sector again, as potentially foreigners don't want to buy our properties, and, just the positivity, the sentiment around the asset class, again, really falls off, really drops off, and, that is an issue.
Simon, thank you very much.
Thanks, Emma.
This is Emma Wall for Morningstar. Thank you for watching.